Hello, everyone out there in the decentralized world. This is Proof of Pod, episode 3. We have a very special guest today. He is a producer of the #1 Bitcoin podcast in the world, creator of WTF happened in 1971, an Austrian economist and a Bitcoin maximalist. Welcome to the show, Ben Prentice.
Thanks, David. Just a quick correction there. I'm not an Austrian economist. I'm an armchair economist. If you read my Twitter profile more carefully, so just get it right.
Armchair economist.
That's right.
Got it.
I'm kidding. I'm messing around.
Okay.
How long have you been an armchair economist?
Armchair Austrian economist.
What is that? Does that pay
well? I'm a student of the Austrian school, but somebody called me that on Twitter once, so I just changed my profile to that.
Well, it does get into like kind of the conspiracy theory sort of stuff when you start talking about 1971, right? It's like
exactly.
I don't know.
You know,
so aren't all Austrian economists armchair economists, more or less? The occasional.
I wouldn't call Rothbard, Hayek. Those guys aren't armchair economists. Those are real.
Yeah, but right. Only occasionally do they get to affect policy, like with Thatcher and the guy down in Argentina, is it?
Yeah, the guys that say you guys should stop all the stuff you're doing with the monetary system and just close up shop, they don't get a lot of funding. It's weird.
Yeah.
You know how that works?
Right.
For sure.
Have you read Murray Rothbard?
Oh, yeah. Yeah, I've read a bunch of Rothbard.
Okay.
I started like, there's a guy named Max Hillebrand who's a Bitcoin Austrian economist. He's awesome. He's good in privacy. He's good on economics. And I got to do like a book club with him and Justin Moon a long time ago. And it was an Austrian economics book club. And we read a bunch of Austrian econ. So I'm not extremely well read, but I've got some books under my belt.
Okay. Have you, I saw a guy who used to work for do you know Rafi Farber?
No, actually, I don't.
He's like, I guess he calls himself the end game economist, but he's also like Austrian. And he had a guy who was like, he had been in Wall Street and working with like advisories for central banks for a while. And he was saying, Rafi was calling like the rate of dollar expansion exponential. And the guy was saying like, oh, well, it's, he said like we target 2% or 3% or whatever, but it's not exponential. And I was like, what is your definition of exponential? Like, it's a very funny thing to say. I guess the exponential means it's blowing up very fast, but 2% per year, that's 1.02 to the n, right? That's exponential.
Exponential has a strict mathematics term definition, but I think with the point you're trying to get at is that with 2% every year, it's compounded. It's compound annual growth, and that's something people with just 2%, right. But it's 2% every year, so it's 2% on top of 2% on top of 2%.
Yeah,
right.
Yeah, there's I don't know if I want to use the word colloquial. There's like kind of like this common definition of exponential growth, which means it's very fast. Mm-hmm. Whereas the mathematical definition, I mean, like, if you put some money into a savings account, you're getting 0.25% exponential growth,
Well, it's funny. We put a lot of charts on WTF happened in 1971, and a lot of them kind of go, like parabolic like that.
Yeah.
And we get pushed back all the time, like, well, but you didn't adjust those for inflation. And we're like, yeah, that's the point.
Right.
Well, let's start there.
Were you more interested in? Go ahead.
When did you start 1971? WTF happened in 1971, and why?
It started because we were arguing with people on Twitter, and we had been doing a lot of. So I have to introduce my friend, Heavily Armed Clown on Twitter, Heavily Armed C. He was my cohort, and we were arguing with people on the internet about monetary economics, and we ended up doing a lot of research on, the gold standard and the monetary. Mm-hmm. If we're Bitcoiners, right, we should at least try to understand why the other system isn't good and how it functioned. And a lot of people don't even understand that, even people that studied it, I think. And so we went down like gold standard, Nixon ending the gold standard in 1971, the Bretton Woods, and a couple of those charts from the very beginning of it, they're right on those Wikipedia pages. You can go find them. Mm-hmm. And then we just started kind of collecting them. And then like every time we were arguing with somebody, we were like, oh yeah, we're digging through our phones for the images. And then Heavily Armed C, he had the idea to just like throw it all up on a website, and it became a much bigger meme than we ever thought it would be. But yeah, that's the short answer.
Yeah, I've run into it actually in the silver stacker communities. I'm sort of a bit of a stacker myself, and those guys love that site actually. It's pretty cool.
We've seen it everywhere. We've seen it on, Bernie Sanders subreddits. So it's not just a right thing or a left thing. It's we've seen Jack Dorsey tweeted it like last year. That was the 50th anniversary of the ending of the gold standard. He tweeted WTF happened in 1971 hashtag, and he had Senator Lummis, Warren Davidson were retweeting it. I've had Ted Cruz was shilling it to Eric Weinstein shilling it to Ted Cruz on Ted Cruz's podcast. It was recently on another, it's gotten way bigger than I ever, imagined. And most people don't even know that I'm tied to it. So like, I have to tell them that. I'm like, yeah, I work at WhatBitcoinDid, but I also made that website. I'm like, really? Yeah. So
that's very cool. So it's a bit of a question. Do you want to offer an answer? I mean, I think there's a lot of different dimensions to what happened in 1971, but is there more than the monetary thing?
I love talking about it. It's, we obviously we put the question on the website because instead of trying to give everybody an answer, that Socratic path of self-discovery can often be like a more useful way to teach somebody versus like trying to cram something down their throat. But we've done.
It's also there's more than one answer.
Well, a lot of people have a lot of different answers, I'd say, David. But I think my answer is mainly, and I will give credence. I think that's obviously not the only thing that happened in 1971. We went off the gold standard, but I think that goes to a lot of it. And I could probably talk for hours on this, but like the really short answer, and if you want to dig into a little bit of it, I'll try to briefly go over this. It'll take like a minute or two. I actually think the answer isn't in 1971. It really starts in the early mid 1800s when gold started failing as money. If you ask a modern economist when gold failed as money, they'd tell you 1929, but they'd be wrong because all of those bank failures that you see in the free banking era, if you really do your research and you understand monetary history, all those were due to the difference between paper certificates and gold in banks. And then you say, well, why are we even using paper certificates if we had this good gold money? And you realize, and Lynn Alden has independently come to the same conclusion, that basically paper started traveling more quickly and more efficiently than gold ever could. And that created, so that was a way to scale gold. The same way you talk about, lightning scaling Bitcoin, for example. Sure. That was a way to scale the functionality of gold while trying to keep its sound monetary properties. But it obviously failed. That anytime you have that that tie, that the tie is like able to break the peg, right? The peg is able to break.
Yeah.
And so, like when you if you go back and you look at all those places, and all these bank failures in the 1800s and stuff, you'll see you'll see the government stepping in. You'll see bank holidays. You'll see forms of fiat. You'll see like bimetallism was a form of fiat where they were pegging the price of gold to silver. And silver, by the way, is another way to scale gold. Gold was a terrible transactional medium for small things. Like you'd have to shave off a fleck of gold and weigh it with a microgram scale in order to buy a pack of gum, or back then, I don't know, it was a horse hoof or something. But regardless, so these are the failures.
Were they chewing on the horse hoofs?
I don't know. No, it just, they might need a horse. I meant horseshoe. Yeah. Regardless.
Oh, I thought they were making glue or something.
Yeah.
Well, maybe they were.
Before gum, there was horse hooves.
and before glue factories, there were horses. These are the failures of gold. Gold is a good monetary technology in a lot of ways, and it's a bad monetary technology in a lot of ways. Paper was a much better monetary technology in a couple ways, and a much worse technology. So when you start to understand that evolution, you start to realize that gold didn't break in 1971.
Yeah.
It was just like,
or 1929.
Or 1929, exactly.
Or 1933.
And I always say, most people don't even realize that there was a depression that wasn't quite as great as 1929 in 1920. And do you know when the Federal Reserve was established?
1917.
1913. So you get 1913.
Yeah. We get
we got this. Now we'll have no more bank failures. Don't worry, guys. We got this 1920. Sure. One of the worst. Actually, probably was one of the worst disastrous ever. And then 1929 was worse than that, right?
Yeah.
Most people don't understand that story is a story of paper money, right?
Yeah.
So that's,
so was your interest in this stuff coming prior to your interest in Bitcoin, or?
Oh, no. Bitcoin led me to try to answer all these questions. I had to understand, what was the system we were allegedly replacing, and that took a lot of work to try to get my head around.
Right. I think one thing that happens is that people don't necessarily want to understand something if it's a bit of a scary topic until they have the solution in their hands, right? Once you're sort of in the cryptoverse, you're sort of able to look a little more objectively at a lot of these things, because you don't feel like you're stuck there, right?
Yeah, it gives you like this third-party perspective on the extant monetary system, where you can kind of take a step back and be like, maybe that isn't the only way to do things, guys.
Yeah.
Right. When did you first get into Bitcoin?
So it's funny because I knew about Bitcoin in probably 2011, I think was the first Slashdot article, 2010.
Wow.
And I was like, oh, that looks like kind of cool, but that'll probably never work. And then in like 2014, I heard like people were like selling it and buying it. I was like, oh, it has a price. That's weird. And I didn't really think about it. And then I was like, well, maybe you can buy drugs on the internet with it. That's cool. And I'll try to get some of that. So I went up and I like load up the Mt. Gox website, and they were like, give us your license and your bank account numbers. And I was like, but this has been anonymous. So I closed that window, forgot about it until about 2017. And I was like, wow, that price went up really high,
Yeah.
And that's when I started going down the rabbit hole. And I basically started buying in January of 2018. And I bought all the way down and bought all the way down and then bought all the way up and then bought all the way. And I've been DCing ever since, basically the exact same amount every month, just always just stacking.
Nice.
Okay.
One thing I just wanted to address real quick, going back to like you said like the bimetallic standard, like we had pennies that were mostly made out of copper, right? We had nickels that were mostly made out of nickel, right? Then dimes are mostly made out of silver, and quarters mostly made out of silver, and whatever. Like to the extent that those things are specie, right? They are this artificial peg, right? And the fact to the extent that they are this artificial peg that kind of works as a coinage system, they aren't specie, right? Because like you can't have a penny be exactly 1 cent worth of copper and a nickel be exactly 5 cents worth of, and so on, because those things fluctuate with respect to each other. So
that's my point. That's my point exactly. Yeah. That those are forms of fiat.
Yeah.
The pegs, yeah.
Yeah.
All pegs are fiat. Period.
Yeah. So when did you, if you don't mind me moving to kind of a next topic, when did you get involved with the What Bitcoin Did podcast?
Yeah, so I was working in the restaurant industry, and then COVID hit, and I had been working there a long time, but it was like, it's time to move on. And I had been on What Bitcoin Did, the podcast, because of WTF happened in 1971. So that was how I knew Peter. And I was like, Peter, I've been working with media my entire life just as a hobby. I can literally do or learn any job you want me to do. And he's like, oh, no, mate, I have my buddy Denny, and like I'm all set right now. And like a couple months later, he just messaged me back and he's like, how much do you make? All right, you're hired. And I've been full-time with him ever since. That's like, it's been about 3 years now. So
yeah, he probably like offhandedly mentioned, oh yeah, like this guy said he wanted to join our team, but we got you got everything covered, Danny, right? And Danny's probably like, yeah, I'm way overworked, bro.
Well, and Peter was expanding, but yeah, I like to say that I memed my way into this job by creating the WTF happened meme and then getting a job.
I love that. I kind of got into my first few jobs by kind of like doing that, because I studied physics in college, and I got out when .com boom, right? So I just like applied to some different places and went in, and Java was the big thing, right? And I was like, oh yeah, like I've studied Java, and they're like, nobody uses Java. And yet we didn't know this, but nobody uses Java. We're using Perl. And I'm like, oh well, just give me a project, I'll go home, I'll learn Perl, and I'll finish it for you, right? Anyway, yeah, so I love that kind of stuff. I love it so much more than like degrees and other like kinds of,
especially in the modern world, Dave, because like AI is probably changing everything pretty quickly about how we do and basically every kind of media is going to change overnight, but like other things too. So if you don't have that mindset of like knowing that you're good at learning versus like, I know enough stuff to get me set for life, I think you're going to have a bad time. You know?
Yeah. Also knowing that like the institutions don't necessarily define reality, right? It's like, they don't teach Bitcoin at university. That doesn't mean Bitcoin is not legitimate, right? It takes these institutions like decades to sort of figure out that the world has moved past them, right?
Yeah.
I'm always telling my kids that I don't think that school, is that great at teaching you, but they're really good at recording what they've taught you,
Also, you have to get bullied, right? I mean, you need to get some good bullying in.
Yeah, that's fair. I definitely have a different perspective on education. I went to like a hippie school instead of high school, where you had to take 0 classes. You got 0 grades. Nobody got any grades. Nobody had to take. There were some classes, and then the way you graduate is by writing a thesis statement saying that you're ready to graduate and defending it in front of your peers like a PhD paper at 18 years old. So it's definitely I definitely have a different perspective. I'm not saying that's perfect for everybody, but it's a far cry from what most people think school is. It's based on the concept that like when kids play, they are learning, and kids have an innate desire to learn, and that you will eventually learn the things you need to learn. So like, all this pearl clutching about like the kid doesn't learn their ABCs by exactly age 6 or whatever. I think that's the wrong kind of idea.
So I've been a Patreon supporter of What Bitcoin Did since 2020, but you were already on by then?
It was around, I don't remember the exact, I'm not good with dates. I only know 1971. That's the only date I'm good at now. I think that was, I think it was 21 in the spring when I joined. But
there you go. So now you know who to thank, that they had enough, funds to bring you on.
Yes. Thanks, David.
Well, David's your boss, basically. That's what he's trying to say.
I don't think that's not what I heard.
This is like the argument you make when you get pulled over by a cop, right? Like,
right,
I pay your salary, buddy.
Hey, that's between you and Danny. You guys can find it out. Danny has a lot of power.
Oh, really? All right. Maybe we should meet Danny.
He's the content director. So like Pete, Pete asks amazing questions, but Danny directs the content of the entire show, really. And I help him, like especially when he got some economic stuff, he calls me up. But Danny, really, he's the visionary for the show. I think at this point, he's awesome.
Who's been like your favorite guest on there? What are the most interesting topics you think?
My favorite guest. I mean, it's almost unfair, but I do really like Lynn Alden. I think she explains very complex economics. She's on the cutting edge of those economics, and she can explain them in such a way that almost anybody can understand. She's hilarious too, and I think she's brilliant. So I've learned a ton from her.
She's brilliant. I'm a big fan of Jeff Snyder as well. I think he was in there.
Oh yeah, I am too. Jeff. Obviously don't agree with everything Jeff says, but he is also very smart. Did you see the one where they
That's an interesting
debated?
topic. What do you disagree with Jeff on? That's a bold statement. I wouldn't disagree with anything that guy says just because I don't know enough about his field.
Have you watched his What Bitcoin Did interviews?
No, I did not. No, but I watched his YouTube.
Then so you've probably never seen him talk about it. He basically thinks that money should be elastic. He thinks that that's why Bitcoin will work. He likes everything about Bitcoin except for its inelasticity.
Right. I don't go to Jeff for Bitcoin. I go to Jeff for macroeconomics, but okay, fair enough. Yeah. I would disagree with him on that too.
But I don't go to Jeff for macro, which you can, and I think that's fine. I actually think he's probably pretty good on it. I don't, I'm not like a on the edge of my seat watching macro trader type person. I think it's interesting. It's more of an entertainment thing for me. Just because I'm well hedged the way that I mostly have Bitcoin, and I think that will be good to have, and I have dollars, and I think between those two I'll be okay. But Jeff, I go to Jeff for monetary, the plumbing of the monetary system. I went through his entire series of macro voices. Do you know about the Eurodollar University?
Yeah, I haven't done the actual university, but I watch most of his YouTube.
Yeah, his YouTube is also called Eurodollar University. It was just so annoying that he called it the exact same thing, but it's also a 7-part series on macro voices, which he goes through the entire monetary system and how it works today and through 2008 and why 2008 really happened. And when you understand those things, you understand like rehypothecation, you understand the failures of fiat money, how it's all claims on claims on claims. And you would understand, if you understood Bitcoin well, how Bitcoin fixes this. And I can't even believe that he can't see it at this point. But no, okay. It's funny to me. It's funny to me because he's so close, and he understands the monetary system itself, how it works today, better than anybody else. I actually think the reason he doesn't like Bitcoin is he knows that if you went to a hard money today, it would be like 1929 for a short period of time because of the deflation. And so when he says we need elasticity, he means we need elasticity to keep life kind of happening the way it's happening today. That's what he really means, I think.
Okay, well, this leads nicely to, you know, what we really wanted to talk about with you today, which is sort of the maximalism stuff.
Mm-hmm.
Yeah,
you know, I'm wondering, what do you think about? Go ahead.
Let me talk about my because I kind of proposed this topic, and that's how we got Ben to come on. So I was I'd say probably the number one influencer, thought leader, or whatever for me in my Bitcoin journey has probably been Anton Antonopoulos, or Andreas Antonopoulos. Anton.
Yeah.
And, you know, so I listened to him tons and tons and tons, and then came across what Bitcoin did in 2020, probably 2019, maybe. And it was totally different, obviously, right? And what I really appreciate about that show is that it's really like brass tacks. It's really like down to like the individual user, the person who doesn't understand cryptography and, you know, all that kind of stuff. And you know, it's something where a big motivation for me to become a Patreon supporter is then I had a link that I could send to people, although I'm not sure I'm supposed to do that. Maybe I'm supposed to only use it for myself, but I had a link that I could send to people and be like, oh, hey, here is a ad-free version of this show. I think you'd really like it, and I can share it with people who are not that technical. And also, like, I would write into what's the guy's name?
Peter.
I would write into Peter, and he was really game about writing back all the time.
Yeah,
I think even before I was a Patreon supporter, I don't think that my $5 a month or whatever matters that much to him. But yeah, he's really game about writing back. And so I love the show. And you know, I think that the three of us probably agree on 90+% of all the issues that confront us in the world out there, right? But one area where I thought we might disagree is this idea of Bitcoin maximalism. And this is one of the things that I would have debates with Peter on, because he would bring on a lot of the guests who would say things that I thought were just exaggerations. Okay. Like there may be a lot of truth in what they're saying about, you know, shit coins and whatever else. But I felt like they were exaggerations. There may be a lot of, we all want Bitcoin to solve as many problems as possible, but it doesn't necessarily solve all the problems, and these other coins are solving some of these issues and whatever. Okay, so anyway, so yeah, so I kind of pitched this idea to you, Ben, of saying, like, you know, can you come on and give the case for maximalism, Bitcoin maximalism?
How much time you got?
About half an hour still.
Yeah. Man, like there's so many places to start on this. I mean, the main thing, you know, I'm a monetary economics guy, so the main thing that I think a lot of the crypto folks understand at this point is the idea of monetary maximalism. You know, the idea of the reserve currency at all. Like, you guys know what that is, right? It's a Schelling point of global currencies. Like, it used to be the Swiss, right? It used to be the French that had it, and then the British had it, and now we have it. That's just everybody kind of, we need one currency that we can, everybody trades for. So that sounds like it's a case for having cryptos around too, because then you have, well, all the other countries have their currencies, and then you have the one reserve currency. So Bitcoin could be the reserve currency then, but I actually don't think that's the case. I think the reason you have all these different currencies is because of legal tender laws. And you need legal tender laws because government monies are so shitty. I mean, look at half of them; they're over 20%, and even the good ones are over 10%. You know, a year or two ago, right? So the only reason you have 120 currencies is because there are laws saying if you like live here and you work here, you have to use this currency, right? You have to settle, you know, debts in this currency. You have to pay taxes in this currency. And also like that creates its own like it's an influenced like shelling point within the country. It's like once it's like established in that country, you kind of got to use that because the other ones aren't as liquid. Like you can use Bitcoin in the United States, but you can't walk into every store and use it, right? It's harder to. You kind of have to change it. So it's like I don't know if I'm making my point well, but the main point I'm trying to make is that we tend to use one thing as money, or at least one thing tends to take a very large portion of it. And I think if you look back in history, like gold was really the only money for a really long time, except for maybe silver. And I've already explained the only reason you needed silver was because gold wasn't good enough to do the job. So I do think that in a world of real monetary competition, which decentralized currencies are giving us, Bitcoin will win. And that's not the only reason. I think Bitcoin is more sound on every aspect that matters.
Wait, one sec. Before we go on to Bitcoin, let's just unpack this idea of like
monetary maximalism.
Yeah.
Monetary maximalism.
Right. Okay. So let's say there were no legal tender laws at all.
Yeah.
Like what would you let's say there's no
everyone
Bitcoin
would use the dollar. Can I answer for you, Ben? Everyone would use the dollar because it's a sociological phenomenon.
Yeah.
And to reinterpret what Ben said, I would say the reason you have legal tender is because it's a national defense issue, right? You can't sell goods from your own country for a piece of paper that's printed in another country, right? So, I mean, would you say that's fair, Ben?
But you're just proving that's how bad fiat currencies are. They have to legally enforce their use. That's my point.
If everybody wanted to use it, they wouldn't need a law to make them use it.
Exactly.
But we do all want the world wants a unified monetary maximal, sort of system so we can all transact and do our accounting.
They need it, Clayton. They absolutely need it for economic calculation, for liquidity. Liquidity is another important one. You need the one major currency because it's the most liquid. So if you're doing billion-dollar transactions, right, or trillions over the period of a time, you can't have slippage. And such that every other currency that's in use is now taking away from that main currency. You're taking away from liquidity, and you're making that main currency not as good. We would all be much better off with one.
Well, even in crypto, we quote everything in dollars, right?
Yes, because the dollar is it's a unit of account of the whole world.
And to go back to the 1971 thing, a big reason why the dollar became the standard is because of the Bretton Woods, and the dollar was backed by gold, and everybody else was just kind of like completely unbacked, or it would fluctuate against the dollar, right? So they're essentially fluctuating against gold as well, but the dollar in theory was not fluctuating against gold.
Post World War II, there was some issues. Some governments had some debt because of all that war, and there was probably the understanding of the people in power, like, this may not work out well for us. Let's try to figure out a system that all works. And the United States had a lot of power at that time, and they said, listen, you guys exchange your currencies for dollars, and then we'll exchange those currencies for gold. Don't worry, we promise. We promise. We won't break it in 1971,
Right.
Okay. So like who would use Zimbabwe dollars if they could use like the US dollar, right? Only people who are forced to by the currency laws.
Yes.
Okay.
That's monetary maximalism.
Pretty much. Not that I love the dollar, but I would agree that sociologically or financially, we want one thing. I'm a maximalist, maybe.
let me because I feel like I'm pulling you along so far. Let me try to thread into that. I think the next thing that I would think you guys would want to go down, which is, you were kind of alluding to it already, David. It's just like, well, what about these other cryptos that solve some other problem? So I don't know if you guys want to think of a good example of one. I can try to think of an example and then try to shoot it down. But I mean, ultimately,
how about
have you guys...
ETH? If we want one example, how about ETH and decentralized exchange?
Yeah. So did you guys see the thing that recently came out on Bitcoin? What's it called?
BitVM?
What is it?
The BitVM?
Yes, the BitVM. So if you use, so ETH money, right? Like, is ETH good money? Is it money? Is it better money than Bitcoin? or is it like oil for the ETH system? I think that's a great place to start for most people. And when you kind of start going down that road where you're like, well, it's kind of money, but it's also like oil for the system. It's like, well, it sounds like you don't really understand money, because we already went over that whole monetary maximalism stuff. And like, why do you need a monetary system for this world computer thing?
Well, commodity can be money
Bitcoin,
also, right? I mean, gold is also a commodity and also money.
Yes, I would argue from a monetary economics standpoint, that makes it worse at doing both. When your gold is your money, that means gold that you want to use for electronics are hoarded by central banks. And your gold that you want to use for money and not for electronics is constantly being mined and used in all these electronics, and it takes away from the economic use. They're two separate economic uses, and it's worse in both cases, I would argue.
Okay, so here's what I would say about is ETH money. I would say that there's no such thing as, okay, there's they name like 4, 5, 6 properties or uses of money, right? And I would say that there's no money that perfectly fulfills all 6. For instance, I think the US dollar is a lot better for exchange, medium of exchange, than Bitcoin is. However, Bitcoin is a much better store of value than the US dollar is, right? So I think ETH is worse money in probably just about every way than Bitcoin, but it still can fulfill some of the properties of money. Like, I've received payments in ETH, for work that I've done.
But the question isn't, can it work as a poor money? We know that there are thousands of cryptocurrencies that work as poor monies, and there are hundreds of fiat currencies that work as poor. That's not the question. The question is, can you do these things that these crypto projects do without a monetary token? And I think that's a much better question. And I think instead of trying to answer that question, what you mostly see today, and this is a very honest answer, I think crypto tokens have become a great way to fundraise projects.
Yeah.
And that makes them much more equities, not money. Yes. Which is funny, because if you really get into the whole monetary economics thing, our equities in the real world, our real equities, have become a money as well. Tesla and Apple and FANG stocks, these are monies. People long-term store their wealth in money. So again, we're confusing everything here. But the point is, I think they're much more useful for that fundraising aspect. And I think that really leads you down a rabbit hole of regulation. And if you guys haven't read Only the Strong Survive by Alan Farrington, he's going to make this argument a million times better than I can even attempt to scratch the surface of. It is absolutely
Only the Strong Survive. Is that what you said?
By Alan Farrington. He has gone through this in depth. He is brilliant. He was on WhatBitcoinDid, and it was honestly it was a terrible show. I'm so sad because I love him, and they didn't really get into that. But just go read that paper. Don't watch his episode, because he goes through this entire topic, and it really is beautiful.
Is that a reference to like Gresham's law?
Yeah, kind of.
Drives out good money, or
kind of, but
I guess also, only the weak survive in Gresham's law.
No, it explores this idea of these pseudo equities, pseudo equity tokens that become partial monies.
Yeah.
And he explores the idea of, well, if people are raising capital and they really are pseudo equities, well, what is the SEC going to come after them eventually? And I think we're starting to see that happen. Yeah. And then will they not be as good at that? Remember, this is what I'm saying. This is what I think they're actually really good at, right? I am openly admitting I think they are serving that function in society for whatever reason today. I'm wondering if they will in the future. And, this is only one thread of this, right? The thread you can go down next is like, well, what if we just abolish all those laws? I'm libertarian anyway. Does that mean that they would then be good at it? And then I would argue no.
Yeah.
So I don't know where you want to go from here.
I don't want any regulation at all, to be honest, of crypto. And but nevertheless, when Gensler or whoever comes out and says, hey, most of these cryptos are equities, he's right. That's what it is.
I agree.
Well, I would disagree that the tokens themselves are equities.
They're pseudo equities, Clayton. people do hold them as store of value the same way that people hold Apple stock as store of value. But that doesn't mean that like a lot maybe let's not talk about ETH for 1 second, but like most of the other ones, they fundraise a project with it, and it allows them to build a team really quickly and get capital from all over the world. And that those funds are tied to that project. That the project fails, and they're like, if they discover some like unfixable vulnerability in pick random coin. I don't know what's trending these days. What's the one that does all the oracles? Chainlink.
Sol has been.
What if it's Sol? Yeah. What if there's some unfixable problem in one of those? They'll go to zero overnight, right? So it's tied to the equity of the project, I think. So I don't know how you could argue that they're not even at least a pseudo equity.
Another, I think, evidence on that is that venture capital buys these things. Like, why would they be buying them? Like they buy shares of companies and stuff, right? I guess
they're not buying the token, right? They're buying a contract for
and they get it for like 10 cents on the dollar, and they get a pre-sale, and then they get to insta dump on retail when it goes live. And so I mean, this is like, you want to get into that, and you have to understand like, well, VCs in the real world and the real world with actual equities, it's kind of similar, where they have all this inside stuff, and you have to be a accredited investor, and it's kind of also bullshit. So I think that's kind of the answer I would give. If that's
Clay knows a lot more about this, but I choose to believe that it doesn't have to be nefarious.
Right. Whether it's an equity or not is not related to whether it's ethical or not.
Yeah.
It can be both or neither. So that's so fair. I mean, if you were to say most shitcoins are scammy and pump and dumps, I would definitely agree with that. Right. If you read the Ripple case, right, they never even really were looking at Ripple itself as being an equity, but the contracts that were written from Ripple Foundation to their investors, right? So those things could definitely be equities. And I think Ethereum Foundation is also going to be in hot water over those things in the future. But yeah, I mean, imagine like trying to say that like an Amazon gift card was an equity, right? That might be a better analogy, right? Just because I'm an investor in Amazon, or Amazon is like having equity, that doesn't mean like a gift card, which represents some value on the platform.
Absolutely, but did Amazon?
It could be depending on how you structure it.
Venture capital isn't buying like billions of dollars of Amazon gift cards either.
Right, but they're not buying billions of dollars of Ripple. They're buying a contract that gives them an option to convert that thing into tokens in the future, or whatever. So anyway, okay. Clay, I think the whole regulatory conversation is not really something that is that interesting, honestly.
I think it's actually
very interesting.
Ethical.
Because like it's kind of like I think about Uber, right?
Yeah.
What went into Uber? And in my opinion, like there's the technology, there's the idea, there's like getting the critical mass and all that kind of stuff, whatever else. But I think the most important thing about Uber was getting enough money to fight the legal battles to get into these markets that were protected, right? And I think that setting aside the debate about equities and money and whatever, let's say some tokens are equities, and the tokens that are equities, they're kind of like circumventing all the SEC rigmarole, right. or whatever.
You get into a jurisdictional issue here, guys, where it's like, okay, you might be able to classify things in a certain way and say, oh, it matches that test, but is it within the jurisdiction, right? I mean, if you were to have like some stock issued in London and the SEC was to say, oh, we're going to regulate this thing, that would be absurd, right? It doesn't. Right. It could be an equity, it could be a stock, but it doesn't fucking matter. It doesn't exist within the boundaries of the SEC. So,
but Clay,
F yourself. And that's where.
But they can prevent Americans from investing in it, and that is significant.
Sure, that's significant. Yeah. Sure. Right. So it depends on what hat we're going to put on, right? Are we going to put on our engineer hat or?
But so I'll try to I'll crappily make the point that Alan Farrington makes in the paper. Essentially, if we're here as crypto bros saying, listen, these things are decentralized, good luck trying to regulate them. Bring it on, Gary, right? Like, I get that. I think it's great. I love that idea. Are they decentralized enough to resist the fucking United States? And if they are, don't they end up looking a lot more like Bitcoin and making all those compromises and being slow and shitty at everything? And then you're just back to Bitcoin anyway. Bitcoin bites the bullet. This is a Nick Carter paper. If you haven't read that one, it's amazing. He goes through why Bitcoin makes all these terrible trade-offs. It's slow and the block times and all this stuff. And it's very intentional. It's not
because
like
it's
we're like, oh,
maximally
that's
decentralized.
Boomercoin.
You're saying, right?
So if these pseudo equities have to be that decentralized to resist Gary, then they end up looking a lot more like Bitcoin anyway, and they can't do all the fun, fast stuff that they do today.
Right. Yeah. So yeah, okay. I would agree with that, right? I mean, if you play within the scale versus decentralized paradigm, right, and you try to make something that's scalable, then you're necessarily going to centralize it, and then you're going to end up in regulatory hot water. I mean, this happened with a lot of the early DeFi projects where they initially tried to put the entire order book on chain, realized that was insane, and then took they did the clearing. They would clear the trades on the block on Ethereum, but they would do the order matching off chain, and that got them into a lot of regulatory hot water because the matching of the buys and the sells is the fucking market. So now you're running an unregulated market in China. Go directly to jail. Do not collect $100. So that did happen to people, and that's legit. That's a legitimate issue. I have different thoughts about the scaling decentralization thing. But let's not get into that right now. But yeah,
here's what I would say though. Like, what if you have a project and like the only way to, and let's just say you have something good that you want to add to the world, and the only way for you to get it out there is to get investment, and you can't like get to an IPO, a traditional IPO, but you can get to like a bunch of Bitcoiners, or not, crypto people who like want to gamble on the next thing, hoping to get a 100-to-1 payout, and they will invest in your token, like given that like it might turn out horribly or it might go to the moon, and the people are gambling their own money, who are investing are gambling their own money, like isn't that okay?
Again, do you want to ask that question from an ethical standpoint? And I don't think you do. I think the answer that you'd like to hear, and you can correct me if I'm wrong here, is I actually think the pumponomics of crypto token launches and the way that they work, I think will ultimately be a detriment to your project and ruin it.
It's definitely a detriment to the industry. As a founder, most people who are not in the industry, when you tell them you're a founder, they assume that you're Sam Bankman-Fried and that you're doing some kind of a scam. And it really paints the whole industry with a very nasty brush that has been actually kind of snuck up on us, I think, since 2016. Prior to 2016, 2017, it was Bitcoin versus the world. It was only a good thing, and we were all together. And then I think since then, actually, when the blocks became full and you got all this, proliferation of ICOs and little shit coins doing 100x, it attracted a different sort of crowd, I think. And that's unfortunate, but we'll see how it all plays out. I'm hoping that regulations aren't the only way that this stuff gets regulated, but unfortunately that may be a lot of it. But yeah, it won't affect Bitcoin, right? Because Bitcoin never did any of that stuff, and it's decentralized, right?
Yeah, but it is tainted. Like last year or
so.
Oh
no, he's right.
When I mentioned Bitcoin, I've had a couple people say to me, "Oh, I thought Bitcoin. I thought they arrested the Bitcoin guy."
Yeah, right. Exactly. Yeah, no, David's right. People they don't know yet, but I think smarter. I think people are starting to wake up, and it's like not. I don't mean that sounds like such a cliche thing to say. I think the finance world is finally starting to understand Bitcoin slowly. I think they're coming to terms with it, and then the finance people will, and then like the banking people are like right behind them, and they're starting to be like, "Oh, okay, it still hasn't failed yet." And they're, I think it's a very slow process to see monetization, even though we're seeing a hyper version of it. If you think about monetary history, it's like geologic history. But we're seeing it happen in real time, and it feels long from the inside, but if you zoom out, it'll feel quickly, I think.
I wanted to give you this at the beginning. Okay, I came up with like a Bitcoin maximalist test. Okay. I'm going to give you a choice of two things. I'll either give you $100,000 in Bitcoin. You can't sell it or do anything with it for 10 years. Or I will give you X, like evenly distributed, by weight or whatever, of the other top 100 cryptocurrencies. and you also can't sell it for 10 years. How big would X have to be? 100K of Bitcoin versus X of, you know, the top 100 cryptos.
The top 100? How are they distributed?
I would say by market cap. So you're going to wind up with a lot of ETH.
You have an index fund of shitcoins.
Yeah, index fund of shitcoins. That's beautiful.
How much would it have to be?
Yeah.
And you have to hold it how long?
What's the market cap of all the cryptos put together? 100,000. I don't know. I feel like I want to say that I'd take the Bitcoin, but you've tried to phrase the answer, so I can't do that.
Yeah. Well, let's just say, would you take 500,000? We take 500,000, 5x.
No, well, it'd have to be higher.
All right. The question is, do you think everything else will go to zero?
I was gonna no, but
in 10 years. I mean, that's
in 10 years. Extreme. I don't think everything will go to zero in 10 years. I think we will see a lot of consolidation. I think we'll see a lot less. Everyone's like, well, there's like 4,000 cryptocurrencies. I don't think they'll really be saying that anymore. I think it'll be more like the top 100, and I don't think the top 100 today will look like the top 100 then, and that's why this question really scares me. So, I mean, right before you said 500,000, I think 10 million jumped in my head. But
10 million, so 100x.
Wow, dude, that is max.
I don't know.
Yeah.
I don't know.
All right.
Yeah, I
would say
I hate the idea. I bought a bunch of shitcoins in 2018 when I was learning about Bitcoin, and I sold them all by the end of 2018, and I never want to hold a shitcoin again.
Oh my god, dude.
I mean, I'm more in like the 2x
all right, just to trigger
range.
Ben, I'm going 0.5. I'll take 50K of the index fund.
Oh wow.
You realize you can't sell it after they pump in 3 months.
Yeah, but I'm diversified. What if something goes wrong with Bitcoin, man? All right. Well, that's why we're here, because we're disagreeing on that. But that's an interesting way to tease it out there, David.
Yeah,
I like it.
All right,
let's one more question. Ben, what do you think are like the biggest barriers for Bitcoin? Do you think there are any to like mainstream adoption? And is there anything that like you think if another coin could solve it, that would maybe threaten Bitcoin? I mean, is it perfect? Is Bitcoin perfect?
I hate that word. I never talk in absolutes, just to break my own rule in the sentence. It's I don't think it's perfect, but it is incredible. So what's its greatest barrier to mass adoption? I feel like you modified the question at the end, but my answer would have been right off the bat that I think that it's a liquidity thing, and it's both a liquidity thing, a monetary liquidity, but it's also just like it's most people are followers, they're not trailblazers, and like what would be a tipping point for Bitcoin to become like the status of the dollar or a global reserve currency or a competitor to the dollar, right? Like 1 and 2 and they're neck and neck. Is there a tipping point, like a couple more countries start using, El Salvador is this like kind of crappy little tiny country, and like that nobody really batted an eye in the real world. Even all the Bitcoiners are like, oh my god, a country not the Bitcoin, right? Like what would it take for them? What would it take for the followers? And I think one of the things is time, and I think another thing is liquidity, because volatility is tough. The UX is bad as well. So like there's not one short answer to this. But I think those problems can all solve themselves over time. So I don't know if you like that answer.
When you say liquidity, do you mean like the amount of liquidity, like the total like amount of Bitcoin that exists as far as like monetary value, or do you mean like the transferability of it and the liquidity in that sense?
It's a really misunderstood word. I specifically mean I call it like monetary inertia. It's so when they if you read like the definition in the financial definition of liquidity, they're talking about like a stock like Apple. If you traded $1 billion worth of Apple stock in a day, you would move the price. But if you trade 100,000 or $2 million worth of Apple, you don't move the price at all. That's the financial definition of liquidity. But I mean it more like you're kind of saying as it relates to the volatility of the thing. I think most people that don't understand Bitcoin point to its volatility as a function of its fixed supply, so that it is perfectly elastic to demand response changes. But I don't think that's the only point. In fact, there's not somebody at the Federal Reserve that's constantly creating more and less dollars as people want more and less of it to keep it. That's not why it's stable. It's stable because of the first thing I said. Not the second. It's not stable because of its elastic supply on a short-term basis, right? So
well, that doesn't seem like it's a big problem. And I mean, in the long run, if it's just more adaptation, you get deeper liquidity, right?
Yes, absolutely. Right. And it's not just a function of market cap. It is tied to market cap. That's a measure of it, but it's a shitty measure for real liquidity. Real liquidity is people making transactions, people holding it long term. You know what I mean? Like the same way people treat the dollar, people don't treat Bitcoin. There are a lot of traders that just trade it. So that's why it's a confusing term that I'm using, but I'm trying to explain what I mean.
And just one more. Sorry, David.
Go ahead.
I need to touch on this because this is like really my bread and butter.
This is all
what
great
do you
stuff.
think about
like,
the
we should do this. We should extend this
right?
Interview to 3 hours.
We can do it another time.
Yeah, that'd be great.
Part two.
I'm just wanted to get your thoughts real quick on the scalability issue, right? And maybe Lightning Network and maybe Liquid Network and what do you think? Is that a barrier? Is it not a barrier? Is there a solution there?
Okay. Can
you were saying earlier that
can you just solve the Bitcoin scalability issue for us here on this podcast
in a
please?
Sentence? Can you be a little bit more specific in what exactly you're talking about, Clayton? Because
I'm trying to leave it. I want to leave it open for you to kind of talk about whatever you want as far as scalability in Bitcoin. So why don't I just say that, right? How do you think about scalability?
Absolutely, it's frustrating because, like I was saying, that Bitcoin bites that bullet and is so decentralized that it makes it for a poor UX. Lightning, in some ways, has a worse UX. In some ways, has a better UX because it's instant, right? But Lightning is not without its flaws. Lightning is move fast and break things. Bitcoin is move slow and don't break things. And because of the layered architecture, you can do it that way because you're not going to break Bitcoin. You could break Lightning though. Lightning is still kind of reckless, even though we're a lot of people are building on it. So it's tough. I mean, you have Lightning. I think Lightning is awesome. I love Lightning despite its flaws. I use it more like a checking account or like the money in my physical wallet that I don't mind walking down the streets of New York City with. And yes, I could get mugged and lose 100, 200 bucks. My life won't change if that happens. My day will change, right? Or my week will change, maybe. So that's the way I treat Lightning.
What do you pay for with Lightning?
I
mean, if I have money in my pocket walking down the streets of New York, I can buy just about anything.
Yeah, I don't use Bitcoin as a transactional currency that much. But certainly if I was in El Salvador or if I was in another country, I would maybe use it at an ATM for liquidity. I buy ammunition online from Phoenix Ammo. So that's something you can use Bitcoin for. But
you buy that with Lightning or the main chain?
Yeah, Bitcoin? The BTC Pay server. And Lightning is generally much more private than on chain, right?
Okay.
But then you also have all you have the eCash tokens like Fedimint. Those I think people have the wrong understanding about them, but to think that they're not part of the solution at all, I think is also missing the point. Liquid, again, I know we haven't seen tons of adoption of these things, but I think they will have use cases in the scaling future. But I don't think it's an easy solution. I think these things take a lot of time. I think on the Lightning side of it, it really takes companies who are really pushing forward, like Phoenix. If you haven't used the Phoenix wallet, I think that's ultimately how it will go. It kind of takes away all the headache. It does both on-chain and Lightning for you, and it's self-custodial. It's kind of insane that it works, and it's not perfect. Sometimes the first time you use it, there's a big fee because I kind of got to like open a channel for you. But regardless, I think it will be solved. I think all of it will be solved. I think making that scalability trade-off to have fast transactions is not the right way to build a monetary system. I think it will scale in layers the same way the internet does, but I guess we'll see.
Yeah, I mean, I would agree with you if you're just one more point on that. If you are in the scale versus decentralization paradigm, I do have a lot of sympathy for the BTC side of things where you're saying, we need to maintain the decentralization because there's no point in scaling it if you give up the whole value proposition, right? Like if you throw away the decentralization, why are we even doing this, right? But anyway, let's not get into that whole rabbit hole because I could talk about Bitcoin Cash for an hour, and let's not go there. Let's save it for next time.
Please don't.
I'd love to know. Yeah. Not Bitcoin Cash, but the whole split, and it's a very interesting subject to me.
Absolutely.
All
David,
right, so we're running a little short on time, but here's, I guess, what I want to say. Last, I guess it was 2 weeks ago. Last episode, we did an episode on Lightning, and my thesis is that I get paid in a lot of different cryptocurrencies. Nobody's ever offered to pay me in Lightning. I feel like it's not very competitive right now in the payments space, and it's just something for maximalists to use because they really believe in Bitcoin and they don't want to mess with anything else. So what would you say to someone like me who like gets payments in Litecoin and ETH and Sol and what did I say, Litecoin already? Anyway,
I think I have
a bunch of different
a good answer
things,
to this, Dave.
and I'm just like, people out there just want something that works, and they don't want to mess around with Lightning. They just want to, pay from Coinbase or Binance or whatever to me via something that works quickly. They don't have to think about it, has low transaction fees, and so this is why like having cryptocurrencies other than Bitcoin is actually good, because it offers all these options that Bitcoin and Lightning would not offer.
I don't like. I think I have a two-part answer to this, and I don't think you'll like either of them. But
I might. I kind of want to be a maximalist.
Can I first ask you, what is the context of these people? You're just saying like in the crypto verse, like, oh, can you pay me for this? And it just happened. They just, okay, well, I'll give you some ETH or whatever. Or you're saying like you're coming across people in daily life and you're like, can you pay me in cryptocurrency? And they're like, oh, I don't have Bitcoin, but I want to use Sol.
I've been doing like crypto consulting for a while. Okay. And I just kind of like, I read people's white papers and I,
this is my point.
Help them with all kinds of stuff.
Yeah. This is my point, is that you're in the crypto sphere, right? Yes. So you're getting payments from crypto people. I think a lot of crypto people have Bitcoin. In fact, I think almost all of them do. And I think they treat it like a long-term savings account. They never touch it. They don't mess around with it. They think Bitcoiners are all these, boomers. Bitcoin's boomer tech, except it's the best at the same time. It's very confusing. I don't understand the crypto people. But they don't mess around with it. They like experimenting. They like messing around with all these crypto systems. And a lot of them, this is the second part of the answer. I think a lot of crypto people ended up with some quick gains on a couple crypto tokens, and they're more quicker to get rid of it. I think a lot of the people that are getting a lot of Bitcoin today didn't get rich on it. They've been stacking like plebs, that whole meme of the Bitcoin plebs. They've been doing this in the trenches for years, and they're not just going to give it up very easily to. I honestly think that is the case, that you are meeting crypto people, and crypto people don't tend to transact in Bitcoin. I think the way that crypto, and I feel like I'm saying this in a derogatory sense, and I'm not really trying to.
I agree with everything you said so far.
Yeah. I think the crypto folks tend to. Yeah, I mean, I think I've answered already. I think I just got off the other train of thought, but I don't think that they mess around with Bitcoin. They just know that it's this thing. It's unmovable and it's going to be great. But then we're going to do our cool experimentation, and all our tokens are going to pump, and we're all going to get girlfriends. So they don't have to worry about Bitcoin. They don't have to think about it, and they don't mess around it, because Lightning is a little weird at first. But if you get one of them to download Phoenix, it's really not that hard to do. It's really easy to work out. There's a lot of narrative about how shitty Lightning is. If you like build and set up your node from scratch and open all your channels from scratch, 100% agree. It's terrible UX. Nobody will ever do it in mainstream. 100%. Phoenix is the exact opposite. It is dead stupid, and there are other wallets that are doing the same thing, and I think that's the way you'll see it.
So I mean, like, what should I do? Like, somebody wants to pay me in Litecoin. What do I say? Like, I don't take Litecoin.
You can do whatever you want to do. I'm not. I'm not here telling anybody what to do.
If I wanted to get on the maximalist train, what do I do?
Well,
you immediately liquidate your Litecoin for Bitcoin.
So I have to
that is one thing. Yes.
I have to have them send it to my Coinbase or whatever, and then turn it into Bitcoin.
You could certainly convert it if you'd like to. Again, I only had one person that sent me crypto, and this is what I was trying to say. It's like, you meet people that want to see you crypto. I'm on the internet. I'm a known personality in the Bitcoin space, and only one person's ever sent me ETH, and it was because he wanted to give me a tip. And I was reluctantly pulled up Coinbase and generated an address on Coinbase And he sent it to me and I sold it for Bitcoin. I've never had anybody else try to send me any, but I don't do services on the internet. And I know lots of Bitcoiners that do service on the internet and they only accept Bitcoin and they don't have an issue.
Yeah.
So you can do whatever you want to do.
I really try. Like a lot of times they'll say like, I'm going to send you X, and I'm like, could you send me Bitcoin? Hey, one guy, I was like, please, like let's do Lightning, because we're doing a lot of small payments, and he wanted to pay me in ETH, and I'm like, this is crazy, and I'm like, please, like let's do Lightning, and he just wouldn't.
That's I don't know how to help you on that one, David, but listen, I am not here to try to tell people what they should do. I'm here to try to understand. And I'm trying to be humble about that. And I've tried to talk you through the way that I think about these things. And that's all I can do. So I really appreciate you guys having me on to listen to me ramble about it, because I love doing it.
All right, Clay, do you have a final question or thought?
No, that's great, man. Yeah, we're just trying to pigeonhole you into like defending your position. Right?
I know.
But we know that everybody's more.
I can tell.
We don't know. It's more.
As soon as I get off, they're going to do all the memes about me, right?
No. I'm actually working a lot more on strong manning. Like I want to
right
make your maximalist argument as strong as possible, so I can maybe even be convinced, or if not, I can at least like have my arguments challenged.
Yeah, I just want to say thanks a lot for coming on, man. It's been really fun talking to you, and I hope we can do it again sometime.
Absolutely, and I have you too.
All right,
I appreciate you guys having me on.
All right, that is it for Proof of Pod episode number 3. Big thanks to Ben Prentice. Is there anything you want to where we can find you, Ben? I know you have Twitter and
just check out WTF happened in 1971, what Bitcoin did, and I'm on Twitter at Mr. Cool BP. Great.
We'll try and get those in the show notes. So it's WTF 3 letters happened, the word IN, and then the numbers 1971.com.
That's it.
Okay, great. Thanks so much for coming on. Thanks, Clay. And we will catch you all for episode number 4. Until then, keep on blocking in the free world.